Now I'm very happy to go live to the trading desk. I've got Victor Adair with me. Victor, I'm looking at, I heard Dr. Mike Berry talk about it, but we see all this evidence, strong U.S. dollars, further in the making. Again, we saw the dollar index explode higher here. I see no reason. You've been talking about this for 5 years. That's a Money Talks top recommendation. And man, I see no reason to suspect that trend's over.
It depends on your timing, Mike. You know, we've had the U.S. dollar rally for 10 consecutive days. The Chinese yuan on the other side of the world is at an 8-year low here, the U.S. dollar index, and there are various indices, but one of the ones we follow at 13, 14-year highs. And tied to that, of course, we've had this surge in interest rates with American interest rates going up faster than other countries around the world, and that's certainly a boost to the U.S. dollar. But in the back of my mind has been this, I'm going to say there's obviously been a big change with the election. And investors are making assumptions about what's going to happen in the markets going forward. And I'm kind of reminded of two books. One is Thinking Fast and Thinking Slow by Daniel Kahneman. And basically he's saying when you make a fast decision, it's often wrong, that you're better off to think things through. And Howard Marks, of course, in his book talks about first level and second level thinking. I guess just my gut instinct as a trader here is we've had this terrific move across markets since the election, and I'm either one of two things. I'm a little sour grapes because I haven't caught it, because we basically got really flat ahead of the election because we didn't know how to handicap it, or I'm thinking that this huge move is maybe overdone, and markets are making a wrong decision about all the things that are going to happen when there's a Trump presidency and the Republicans are in charge of both houses of Congress.
Yeah, well, and certainly they're speculating on what's going to be the outcome when there's all these questions hanging in the air. But I like your point right off the top, Vic, when you said it depends on what your time frame is. I mean, your opinions have to match your time frame. So if you're a trader, as you said, you got to be a little bit leery that profit taking at the very least is going to come through, if not some disappointment, to bring these, U.S. dollar or Dow Jones at another all-time high kind of thing. But if you're longer term, I'm talking now U.S. dollar, there still is a case to be made. I mean, to me, it's meeting our Money Talks scenarios beautifully. I look what the euro did this week, and some of that money's coming into the U.S. So I think your point about make your trades or your investments match your time frame is a real key in this environment.
Yeah, that certainly has been one of our key things. I call it, keep the time frame of your trading in sync with the time frame of your analysis, or the other way around. And when I'm talking here in the show, I'm mostly talking about the short-term trading that Drew and I do. We reduced our positions ahead of the election. We'd had good profits. We didn't think we had any skill at handicapping the election. We didn't want to give a good chunk of those profits back because of something we had no idea or any skill to predict. And then we had this dramatic move following the election, and we were basically unable to bring ourselves to jump on it and kind of go with it. We did do a couple of things. The gold market, we bought puts on that just after the election. We covered those puts when gold was down about $50. The gold market, by the way, huge ETF sales this past week, and there's still a great big long position in the spec on COMEX. So the gold market certainly still looks vulnerable, and especially with U.S. dollars so strong, interest rates rising, those are two tough things for the precious metals to try to rally in. And, of course, as Mike Berry was saying here, that the Federal Reserve, I think the chances of them raising interest rates by 0.25% next month is about 100%. That's what the market's discounting right now. And the real key, I think, and this is Drew's idea, and I think it's perfect, is the market is not placing much of a bet on the Fed continuing to raise interest rates as we go into 17. And if the market begins to think that will really be another key support for the U.S. dollar.
Well, so much coming on right now. We'll be here to chronicle it. Vic, thanks very much for taking the time. It's been another busy week for you, I'm sure, and we'll be live next week. Thanks, Victor.